Okay, welcome back. So we are on in this video the 2017 question 1, and now we're going to look at part 8. So part 8 says a check for €700 had been received in respect of a debt of €1,200 previously written off as bad. The debtor wishes to continue trading with Mullen and has undertaken to pay the remainder within 1 month. So the debtor has paid 700 and says they'll pay the remainder, which is 1,200 was the full debt minus the 700 they paid, so the remaining debt is 500. And the debtor says they will pay the remainder within a month. They'll pay the 500 within a month. No entry was made in the books in respect of this transaction. So the first thing first is we received a check for 700. So ordinarily that would make our bank account go up by 700 if our bank was a current asset. But our bank is actually an overdraft. So when we receive €700 of a check and we lodge it to our bank account, what it does is it makes our overdraft go down. It reduces the amount we're owed. So minus 700 there first. So that's minus 700. The next thing is the debtor has said, I will pay you the €500 within a month. So that increases the amount owed to us. Before they came back, they had been written off as bankrupt. The debt had been written off as a bad debt. And so it wasn't included in our debtors, that 1,200. We had already taken it out because it was a bad debt. But now they're coming back and saying, look, I'll owe you the other 500 and I'll pay it within a month. So debtors is a record of the money owed to you by your customers. So that's another 500 debtors is going to go up by. Okay, so altogether, how have you profited, I suppose, from this transaction? Well, you've got this asset of 500 that you've gained, so that's a good thing. And you've got this liability, which has gone down by 700, so that's also a good thing, isn't it? So all told, if we check the balance at the top of the balance sheet, the top half of the balance sheet, you would be better off to the tune of 1,200. And so to balance that over here in operating income, when somebody has a bad debt and they come back and they say, well, now I can pay that bad debt, we call that bad debt recovered and we enter it as a gain. Just like when a bad debt happens, we put it in as an expense. So the opposite, when we get that bad debt back again, when we recover it, we put it in as a gain. And the full amount by which we've gained is 1,200 because we're better off because of the money received, the check we received, and because of the asset that we've received, that €500 IOU from the debtor, if you like. And this plus 1,200 here will make the bottom part of our balance sheet go up by 1,200 also.